We're not done with strategies. We have futures and options strategies for you coming from Vinod Sharma of HDFC Securities. Good morning, Vinod. It's almost a Diwali out there on mid-caps. What are you picking up today, mid-caps or large caps?
Yeah, I'll always continue to pick large caps. Okay. Although right now what's happening, Lata, is the fact that the tail is now wagging the dog. I mean, it has been told a number of times by Anuj and other people how mid-caps have. So I don't want to dwell on that. But the fact is that I'm happy that a lot of the analysts are now on the all buy side, something which only I do. So I'm starting my calls with the bank nifty per se. This is the first call that I'm bringing in the bank nifty after quite a while. I'm buying the 27,800 call, which is the weekly call for the week ending 14th March. I'm buying it at 127, stop loss at 70 and target of around 220. It goes without saying that it is the strength here is much more than the Nifty per se, because Nifty is down almost 8% from the top, whereas the Bank Nifty is just around 3% from the top. So I think Bank Nifty would do well, better than the overall markets. Then if you want to pick one particular stock, and if you don't want to pick the Bank Nifty, then it's ICICI Bank that I'd like to buy. I'm buying the 370 call at 6.3, stop loss at 4 and target of around 11. This is one particular stock in which there is a highest amount of confidence among the banking sector. To go with that is obviously JSW Steel company. The steel in China is up by 0.5%, and I think right now will do well because of the fact that technical and derivative, all the positions are on the long side here. I'm buying the 295 call at around 10, stop loss at 7 and target around 15.
Okay, so you've wrapped up most of your calls. You have some more large cap calls. Yeah,
two really large cap ones. One, of course, is ITC that I continue to be a buyer. A disclosure here, I own these stocks in the cash market, although we are never allowed to trade in the derivative segment. Okay. So ITC, apart from the fact what the analysts brought about, the fact is that since it has come to GST, there is further amount of uncertainty which has been reduced as far as the tax rate is concerned. So it obviously warrants a higher PE. Technically, I'm buying the 285 call at around 5.5, stop loss at 3.5 and a target of around 9, which I think should mean almost 80% return should that level target be reached. And Reliance obviously is a call where I'm buying the 1240 call at around 34, stop loss at 27, target of around 47. This is largely because it hasn't moved up much in the last 2 days. So therefore, the risk reward ratio is much better here as compared to others because it's not moved up at all in the last 2 sessions.
All right, Vinod, we'll leave it at that. Thank you so much for joining us and giving us your F&O trades. That's the word coming in from the F&O expert. But now let's talk about the fundamental expert. SP Tulsian of sptulsian.com joins in. Mr. Tulsian, good morning. On ITC, we were just speaking to an analyst who told us about how the stock is still at a almost 40% discount to its peers in the sector. You think it deserves a much bigger upside? And what's your advice to investors now?
See, Sonia, I think this 40% discount is continued to remain because maybe because of the SIN product, because of the many big investors, not going for the SIN stocks, for investments. So I don't think that it has any meaning in saying that it is ruling at a 40% discount. Other FMCGs are ruling at 50 to 55, while this stock is ruling between 32 to 36. I don't think that this gap is going to get breached at any point of time, and this is going to continue to remain. Maybe even if I presume that the EPS can move to about 10 rupees for FY21 or maybe FY20 in between, then the stock will continue to rule at a P multiple of 30 to 32. And taking that into account, I think that one should not be too ambitious on taking a call that this gap can get breached. But yes, taking in isolation, if you have if you don't have any policy of not investing into the SIN stocks, then ITC definitely looks a good stock to invest.
Okay, Mr. Tulsian, good morning. Your thoughts on how to approach a name like DHFL?
See, Anuj, I have gone through the report of TP Oswal and Associates having issued, and if I go through the reports, I don't think that one can presume that it's a clean report having issued in favor of the company, to the company, because this has been more in respect to the Cobra Post allegations. And if I just quickly go by this, if you read 8.4 clause, it says that 15 borrowers have availed the loans of 7,000 plus crores. And if you go by the 8.12 para 8.12 of the report, which says that Darshan developers may have used the money which has been lent to 4 companies to the extent of about 1,400 crore. Similar is the case with the 8.8, the charges, non-registration of charges, which again seen to be a serious lapse, on part of the company, where the 4 companies have been given an amount of 2,000 crore where the charges have not been registered, and the delayed charges registration is not possible under the Companies Act. So these are few paras. But yes, one can draw the solace that yes, the allegations of the Cobra post which have been leveled are seen to be too wild and reckless, and part of that maybe this could be the procedural. Now in one of the paras also it says that the monitoring of the funds have not been done by the company, the post use. And maybe in the sanction committee where the loans are sanctioned of more than 200 crores, two are the promoters and 1 is the independent director. So again, these are the few lapses or maybe the loose end of the operational things. But I think that overall, if you draw the conclusion from the report, probably it sees that the things are not seen to be so reckless and so wild. Maybe to the extent of about 2,000 crore, in respect to the 4 companies having disbursed. Probably company should redress and give explanation on that account.
Okay, yeah, actually, on the issue of those shell companies and that 14,000 crore given to 45 entities, the report seems to give them a clean chit, or at least the accusation is not as serious as Cobra Post made it. Would you say that?
Yes, that's right. In fact, if you see, Lata, now the shell companies issue is seen to be very much hot and very much serious, because if you have these shell companies, then even this serious fraud investigation office and maybe the MC, is taking a very serious note of that, and rightly so. So yes, the relief is seen to be have come on that account. So that's what I've said, that the major allegations, having leveled by the Cobra Post are not seen to be existing there. But these are the few, maybe you can say that the corporate governance issue or the procedural issue of non-monitoring of the funds having used, or maybe the 4 companies need to give explanation that how the amount of 1,400 crore have been used by Darshan developers of the 2,000 crore having disbursed to these 4 companies. So these are more seen to be of the corporate governance or maybe loose accounting practices, and not the fraud or of the shell companies having formed by the promoters to the extent of about 14 to 18,000 crore having disbursed or routed through those companies.
Okay. Sir, I also wanted to ask you about Bharat Forge, because the stock has recovered almost 20% from the lows in February. Would you be optimistic now, or would you be a bit concerned considering that the North America truck orders continue to be weak?
See, Sonia, if you go by the statement of Baba Kalyani, and which I agree with him, that the North America truck sales order should not only be the criteria for taking a call on the stock. And these are, even if you see the order pipeline for the North America truck market, that is seen to be quite comforting, for the company going forward as well. And the month on month, I may say that 7% increase on month has been seen. YOY decline of more than 50% or 56% was very much expected for the company. But one can say that 7% increase on a month-on-month basis, that too for the shrunk month of for the month of February, is seen positive. And I agree with the statement of Baba Kalyani having given that should not be the only criteria of looking for the monthly order of North America truck sales should not be the only criteria for taking a call on the stock or on the viability of the performance of the company.
Okay, Mr. Tulsen, I wanted to ask you a more wider theme. Yesterday we were speaking to one of the auto dealers, and he was extremely pessimistic about the inventory days, the two-wheelers, some of them in some places 75 days. But there was one positive, he said. He said the rural areas are not so bad. And he seemed to indicate that all these farm loan waivers and income transfers in states like Telangana, Orissa are all beginning to work. Do you think that's a theme we have to take seriously, that rural demand may be on the mend?
See, Lata, in fact, yesterday in the afternoon show, I have touched upon this. If you first take a call, since we are referring to the rural theme, or maybe the rural offtake being seen in the automobile sectors, I've touched upon that. Take the case of 3 two-wheeler companies. Hero Moto have clocked in a sales of 612,000 vehicles in the month of February against 590 for the month of January. Now, logically, if you really extend the weakness which we have seen in the month of January and extrapolate that for the month of February, we should take 90%, exactly 90% of the sales of January as the ideal sales for the February under the similar circumstances, but that has not happened. Instead of seeing the 10% reduction by about maybe sales of Hero Motor should have been 550, but the sales have come in at 612. Similar was the case with TVS Motor. On a sequential basis, we have seen an increase in the automobile in the two-wheeler sales. Similar was the case with Bajaj Auto. Now come on the passenger vehicle sales also. If I just take a call on the Maruti also against 151, the February month sales was 148. So I don't think that if you adjust if you take 90% as the sales of the January month, which should have been seen in the month of February, but all the companies have shown the better performance except Eicher Motor, because Eicher Motor have shown a very good performance in January of 72,000 vehicle, which I have said that I doubt that this performance will get sustained, and that's what we have seen. So I think that overall, if you really take a call, even coming on the tractor, Escorts have really surprised with a very good growth in spite of January and February are always in the dull months for the tractor sales. In fact, tractor sales are seen to be increasing, seen to be very high in the month of March, and then again starts in the month of May and June. So I think that overall, I have not found to be any kind of disappointment. Even Ashok Leyland on the same parameter, 90% sales of January should be taken as a base, has performed much better. So I think that the rural theme is definitely picking up, and in continuation to that theme, only yesterday afternoon show I have said that yes, I am keeping positive view on the rural theme and taking positive call on the NBFCs, FMCG stocks, or maybe the two-wheelers and the passenger vehicle stocks going forward, because the prices at which these stocks are seen, maybe the two-wheeler stocks have risen in this last maybe couple of weeks like Bajaj Auto and Hero Motor or even Eicher Motor, but the passenger vehicle stocks are seen even languishing at a very low level like Maruti and Mahindra & Mahindra.
Okay, we need to plot that theme further in terms of possible healing and recovery in rural demand. We'll do that in a bit. For the moment, we have to take a break. But while we do that, let's leave you with a very important conversation that our colleague Nisha had with the head of the private equity firm Blackstone. Remember, Blackstone is huge, currently manages $500 billion globally. It's bullish on the auto component space in India. Finds that the distressed opportunities are precisely the point at which they should be entering. Listening to Amit Dixit, who heads Blackstone in India.
So auto is, especially auto components, because the amount of opportunity we are seeing in auto components, especially small companies which don't have the scale or the access to capital or management, who would like to be part of this platform and participate in the value creation. So I'm very excited about auto components and our ability to build this platform. Overall, another area, because of this volatility which is emerging, is distress of various kinds, whether NBFC liquidity squeeze, mutual fund issues around loan against shares, or just the IBC process.
Right.
That also is throwing up variety of opportunities, whether it's to buy loans, or whether it's to buy companies themselves, or whether it's to provide solutions to business owners who have some kind of an issue. So whichever way it plays out, we have a bucket within Blackstone to play it.
Okay.
So we have a private equity platform, we have a real estate platform, and now we have a special situations, tactical opportunities platform.
Yes.
So whether it's a loan or a structured equity or a control deal, whichever way it comes, we are flexible to play it. So I think those two themes, auto component, buy and build, and second is opportunities emerging from market volatility and distress is something I think we'll see a lot of private equity action, at least from Blackstone in 2019.
What about industrials? Is that also a space which you are looking at closely?
So industrials is quite interesting. Within industrials, we like a theme called B2B2C,
Yes.
which is business to consumer. We actually invested in a company in 2012 called SH Kelkar, which makes fragrances and flavors for all the FMCG companies. It's been a fantastic investment for us. The company is now publicly listed. We've made a very strong return because it doesn't have a branded product, but its fragrance is there in every shampoo or any perfume you use or agarbatti or what have you. Similarly, packaging companies or other ingredient companies who are levered to the same trend. The same trend is domestic personal consumption.